Hello everyone, this is Girija Raviraj from SLN Tutorials. This channel is all about commerce and computer education simplified. In the sense, I want to put the accounting terms in a very simple manner for better understanding of the concept by the beginners and new learners in easy way. I want to give you an introduction about accounting and its basic terms. So before going to the topic, just I want to give a small introduction where the accounting has been started. Fine, man is a social animal and having more needs. So in order to fulfill needs, he has to perform some activity by joining with fellow human beings. The activities what he has to undertake can be classified into economic activity and non-economic activity. By performing the economic activity or by doing the economic activity, he will get money. With the help of that money, he can fulfill all his needs and wants. Example, doing a business or going for an employment. And non-economic activities are those activities which will be performed out of duty or love or self-satisfaction. Example, mother might be cooking at home or she might be teaching for her children. It is out of love or out of duty or for her self-satisfaction. She might be performing some activities which is not going to fetch her any money. Friends, so with an intention of earning money, the economic activities can be undertaken either by doing business or going for the employment. Right? So each and every business is started with an aim of making profit and to grow. So in order to achieve this purpose, money is being invested, business is started and more activities are undertaken to earn profit. So the activities, what are all happened in your business, like paying rent or paying electricity bill or purchasing of goods, it might be in bulk, cannot be remembered all the time because the human memory is very limited memory and can be missed out. Once these activities are missed out, it will be as a great loss or a business might be suffering a loss. So, in order to overcome these difficulties, activities what are all carried out will be recorded. Next, I want to tell you the meaning of a transaction. So, it is nothing but transfer of money or a money's goods of worth or a service between person. Each and every transaction will be having monetary value and it will be expressed in terms of a money which is a commercial, which is a universal term, can be easily understood by each and every one in the same manner. So whatever activity that is taking place in any business is called as a transaction. The activities carried out by the business is called as a transaction. Example, purchase of goods or purchase of asset, selling of goods, paying of rent, etc. With definition of accounting. So now I want to define accounting. So it is an art of recording, classifying, posting, summarizing, balancing and interpreting the financial statement, communicate the result to take the decisions regarding the business. So the definition is going to tell about the functions of accounting like recording. Whatever transaction happened in the business, that will be recorded first. Next come with classifying. Classifying in the sense that in which book it has to be transferred is called as a classifying. Whether to take into purchase account, purchase book or a sale book or a data general ledger like this. Next, That is, in classifying, we will be finding out in which book it has to be posted. After identifying the book, next come with posting. Posting is nothing but transferring the transferring the transaction from journal to ledger is called as a posting. Next come with summarizing. Summarizing is nothing but adding up or finding out the difference. After summarizing, the statement will be prepared and balancing will be done, and final result will be interpreted. In the sense, final statement will the financial at the year end, the financial statement will be prepared and result will be interpreted. After finding out the result, it will be communicated to the concerned people to take the decision regarding the business. So who are all the person who are having the solid interest in the business, they have to take, they might be they might be in the need of taking the decisions, so that their decisions will depend on the accounting statements what is given by the accountant, right? So here the what are all the functions? First one, recording. Recording is nothing but whatever the transaction happened, it will be recorded according to the day wise. Next come with classifying. Classifying is nothing but identifying in which book it has to be recorded, in which book it has to be transferred. Next one, posting. Posting is nothing but actual transferring of journal into ledger. After posting, it will be summarizing. Summarizing is nothing but adding or finding out the balance. And after finding out the balance, the final statement or a financial statement at the year end will be interpreted and a result will be found out. After the result is found out, it will be communicated to the concerned people. So here, accounting is considered as a language that is going to supply the information to the stakeholders. I want to give an example, or I want to tell you who are all the stakeholders. So the stakeholders are the person who are having the solid interest in the business, or they might be having the solid interest in knowing about the affairs of the business. So the person who are having the solid interest is called as a stakeholders. So first one, owner and manager. First I want to tell you about the owner. Owner is the person who is having the solid interest in and he will be very much keen in knowing about the profitability position, because he could have invested money in order to get more profit, and he will be having more interest to know whether the business has earned that much of profit, what has been expected, and he will be very much interested in knowing about his financial position. Friends, whatever the owner intention, the manager will be having the same intention. In the absence of a owner directly participating in the business daily or a day-to-day affairs, the manager will be doing the same thing, and he has to communicate the result to the owners. So the interest of the owner and the manager will be of the same sense. Now, I want to come with employee. Employee are the person who has been working in a business, and they will be working for the investment of the owner, and they are the reason for the profit earned by the business. And employee will be very much interested in knowing about the profitability, because he will be anticipating more salary or more benefits, and by knowing the accounting position, and he will be ensured whether his salary will be hiked or whether his benefit will be more or not, right? In this way, employee is having a solid interest, and he will be considered as a stakeholder. Next come with customer. Friends, customers are the person who are the reason for the business profit, and he will be expecting from the business right quantity, right quality, right price at the right place. of the goods and services, and he will be very much interested in knowing whether these can be maintained by the business regularly. If a business is having a stable profit, the business can supply the goods or services at the right time, at the right place, at the right price, at the right quantity. So he demands the information because he has to know the stability of the business. The financial statement will give the information about the stability also. Right, next to come with government. Government is also having the solid interest because the government will be getting revenue from the business, and it is very much keen in knowing about the taxes is paid in accordance with the accounts. In that way, government also will demand financial statements from the business. Next come with supplier. Suppliers are the person who is supplying the goods or services, and he will be very much keen and he will demand the financial statement to know whether a company is in a stable position, whether a company is able to sell the goods or services at the given point and raise the revenue. In this way, supplier is also in having, a supplier will also be showing the interest in company affairs. So the parties who are having the solid interest are called as stakeholders, and the stakeholders are the different parties having the different intention, and but they all will be supplied only one financial statement is called as a balance sheet and profit and loss account. In this way, the accounting is considered as a language because it is going to communicate the required result by the stakeholders. Thank you for watching. Please subscribe. Please press bell icon button. Stay tuned. Thank you.